Good morning. Welcome back to the morning show with yours truly, Dex the Algo Capitalist. Hopefully, everyone had a wonderful, relaxing, and peaceful weekend. Well, now it's time to get back to work, time to get back into these markets. But this week is going to be an interesting week because we have the holiday coming up. Um, you know, we got Good Friday upon us and Easter. We just finished celebrating that and Palm Sunday and Passover and all that. And so this, on the religious front, we got that going on. And that is of course, great historical and current and future significance. Then we have a light week of reports. So, today we just got the new home sales. Tomorrow we get durable goods orders and consumer confidence. And then nothing until Thursday. Thursday, we got the initial jobless claims and pending home sales and the final consumer sentiment from the fourth quarter of 2023. And then on Friday, we have advanced U.S. trade balance goods and retail inventories and wholesale inventories, personal income, personal spending, PCE index, core PCE index. And then Fed Chairman Jerome Powell is going to speak at 11:30 a.m. So that's what we got going on. But you also need to know this too. This is very important. The markets will be closed this Friday in observance of Good Friday / Easter. So markets will be closed on Friday. So no trading Friday. It's going to be a shortened trading week, holiday week. So just wanted to give you guys the lowdown, the skinny on that. All right. So now you know. If you don't know, now you know. All right. So not a whole lot as far as news is concerned, but it's still some news nonetheless. So we're going to talk about it. All right, but first we're going to jump into the market. So as you know, the opening bell has rung, and we're a little after half an hour's worth of trading after the morning bell. So let's take a look at how the markets are shaping up and what happened in the overnight, and then we'll take things from there. Sounds like a plan. Let's do it. All right, so first we got the U.S. dollar index. It's down 27 pips this morning, and it's at 104.20. So anytime you get back above that 104 handle, that is going to put some kind of pressure or make a muted rally appear in your other pairs, such as the euro. On the back of the dollar being down 26 pips, you got the euro up 30 pips at 108.72, which is still a far cry from being above the 109 handle, which is a significantly more bullish, robust situation, but that's not what's happening right now. It should also be noted, though, coming into today, that your micro euro futures here has a bullish 2-bar Charlie setup. So we're expecting all day up day with the market finishing in the green. Then we have the pound sterling this morning. It is up 55 pips at 126.51. Again, still below that 127 threshold, though, which is what you need if you're going to build a more bullish outlook for the pound. Then the Aussie is up 26 pips this morning at 65.57. The longer the Aussie stays in the 65 handle, the more wind is taken out of the bullish sails. You need for the Aussie to stay above 66. Now, we did get stopped out of our long Aussie last week. So perhaps this is one of the reasons why the system has put us back on the sidelines for now. If you notice, there's no real entry points coming into a lot of these today because of the consolidations. The markets need to decide what they want to do. Now, the big news, the big story this morning is the Bitcoin futures up $4,395 this morning, trading at 68,305, just off the morning high of 68,495. It should be noted that the overnight low is 66,400, thus giving us a bullish 2-bar Charlie setup on the day for the Bitcoin futures. So we expect Bitcoin to continue to rally throughout the day and to finish the day in the green. Of course, Ethereum futures is catching a bid on this as well. Right now, you have Ethereum up $156 right now, trading at $3,503, just pulling back from the morning session high of 3505.50. Now, it did dip to 3411 in the overnight market, and it came just a few ticks shy of a bullish two-bar Charlie setup, but not to worry. It should benefit based on the Bitcoin setup, so it should rally in sympathy with Bitcoin today. Switching over to the crude oil futures, up at $1.22 right now, trading at $81.85. It's been oscillating between 80 and 82, we should say 82-ish. So you got like a $1.50, $2 trading range on the oil. It's really not doing much. You got nat gas too, kind of quiet. It's down 3 pennies this morning at $1.63. Did get to 158. Nat gas back to the $1.50. That is a very long-term historical support low here. So nat gas is pulled all the way back from that $4 handle all the way back down to $1.58, which is significant. That's saying that now that we are pretty much have left winter behind us, spring has officially started. That demand, because of the cooler air temperatures, has gone away. Now we're getting into spring and summer, and I don't think you're going to see anything going on here except for it's going to stay around 150 probably for a long time. It could even go below that. So anyone that was having bullish outlook on that gas, I just don't see that. I think we have a lot more gas than we have demand. Then in the gold futures, you're up about almost $20 this morning. Oh, there it is. You're up $20 even. It's trading at $2,180 an ounce. All right. And then you have silver up 11 cents at $24.95 an ounce. I will say this. Although silver is catching a bid on the back of the gold this morning, they're both still not looking so hot as I showed you on the algo charts. There's something going on. One of the things that's going on is that gold is having contract rollover. The current front month is about to expire. The next front month is above 2,200, I do believe, and so it's going to be interesting to see how this plays out. But you got a negative bot check in your gold futures coming into today's trading that cannot be just easily dismissed and waved off. And you also showed signs of bearish momentum coming into silver, all right, from last night until now. These situations cannot be so easily dismissed or just waved off or overlooked. It is significant. Not to mention, you have a plethora of crash alerts coming in today in your stock indices. You had it in the Russell, you had it in the E-mini S&P 500, you had it in the NASDAQ, and you had it in the Dow. All 4 indices were giving crash alerts for Sunday night into Monday's trading session. So we're not surprised to see the markets down slightly a little bit today. But these things should be noted and noted carefully because they have a high probability of being rather significant because you really haven't had a pullback. So I'm getting ahead of myself. We'll come back to that, but I do have more for you on that. Okay, so copper is still above $4 this morning, trading at $4.02, up a penny. Dow futures down 106 at 39,762. Now, again, even if we don't have a correction right now in the stock indices, a mere pullback could be sizable enough to make people feel like the market is corrected or topped out because you haven't really had a real correction in your stock indices with the exception of the Russell. All right. But the Dow and S&P has not had a real correction. You've had pullbacks. And because of the strength and veracity of these indices, even if it does pull back without going into full-blown correction, they can still fall several hundred points and not even be called a market top. Now, you understand what I'm saying? So there's so much fluff and air here that even the heaviest pullback will do no technical damage on the chart whatsoever. Like example, the Dow could fall 800 points today. And people say, oh, the market crashed today. And then tomorrow gain it all back because it was just a pullback. It's still not going to hit correction mode. The correction threshold is so far away from the market right now that it would take anything short of World War III jumping off would not make it possible to happen, is what I'm saying to you. That's how much energy is built up in these stock indices. So when we got these crash alerts today, these crash alerts are saying that a pullback is imminent in the stock indices. It's not calling for necessarily a market top. It's just saying that a pullback is imminent, and it could be a rather catastrophic one, but not enough to say the market's going to enter into a correction. A pullback is just a pullback. It just simply means in a bear market, prices have exhausted themselves and want to take a break, like a sprinter who has ran his heart out, and then it gets to a point where it's okay, I have to either come to a complete stop or I have to slow all the way down so I can catch my breath. And that's all that means. Now, a correction is when the sprinter has sprinted, ran their maximum for as long as they can, then they come to a point where they can't slow down. They have to come to a complete stop. They can go no further. And then when they stop and they catch their breath, they turn around and start heading back the opposite direction. That's what a correction is. See the difference between the pullback and the correction? So that's where we are right now. Even the S&P 500 this morning is down 7.5 points at 52.85 3/4. Now, it did dip briefly in the overnight to 52.72 3/4 before rallying back. So something to think about. The E-mini NASDAQ 100 this morning is down 62.5 points at 18,513 3/4. It did dip briefly to 18,415 before rallying back 100 points. So that's notable. The only positive indices this morning is your Russell My Hustle, up 14.7 points at 2108.20. Now, it had dipped to 2089.20 in the overnight market, and it hit a high of 2111.90, which is just pulled back from that just now. So the Russell, being the most oversold and the most bearish of your indices, is the one that is trying to lead the way back up. So very interesting setup, turn of events right now. As far as that goes, I think we're going to continue to see a little bit of volatility pick up because of the holiday. I cannot recall the markets really being down during the week of Easter leading up to Good Friday and all that. I don't recall that. If any of you do, you can type it in the comment section here, but I don't remember the market being down on that holiday week. That's usually an up week. So perhaps whatever red we see is going to be short-lived. You never can tell. I mean, anything can happen. We live in very volatile times, so anything is prone to jump off. I just don't know if I see a strong likelihood of that being the case. I think we're going to have a possible ceasefire as far as everything else is going, and people are just going to take a break because it's a holiday. So, yeah, that's kind of how I'm looking at it. All right, let's get into some news. So Warren Buffett's favorite market gauge just hit a 2-year high. It could mean a crash is coming, according to the Sage of Omaha. Only one generation has the skills to launch a successful new business, and that's Gen Z. And wait, it's okay to do drugs at work now? Well, But first, let's talk about the retirement crisis. What was once a natural part of the American dream, retirement, is now a luxury many workers can't even afford. It used to be that you could expect to put in a few decades of work and then enjoy a few more good years of rest. But more and more often, retirement age people feel they've been left behind. Well, I mean, think about it. You would graduate high school, maybe go, do a few years at university, and then you go get yourself a job, maybe work in a factory, assembly plant, something. All right, some type of industrial production, type of a blue collar type of a job, all right? And you would make enough money where you could afford to get married, start a family, and buy a house and a nice car and put your children through school. And then after you put your 20 years in at the job, maybe even 30, then they will have a party for you. You would depart with a gold watch and a pension. So you could go home and live out the rest of your years enjoying your children and grandchildren and spouse. And you didn't have to worry about money because that pension would come in every month so that you didn't have to worry about money. All right, you got that pension. And if you made any investments outside of that, then that will just be the icing on the cake for you, right? But companies don't even last 30 months, more or less 30 years. You got companies that they go out of business the same year they open. And that's just the way it is. How many of you listening to me can say, yeah, we right there with you, brother? How many of you have worked at places that no longer exist? You can't even really put it on your resume because the companies don't exist. They can't be verified. You've worked at companies and industries that no longer exist. Some of you, your entire resume is a ghost. Every job you've ever had, every company you've ever worked at has gone bust. They no longer exist. So it's like you've never worked a day in your life. But the Social Security Administration says, yes, you have worked because you qualify to get your SSI when you retire. But we do have a retirement crisis. See, the problem is multifaceted. Pensions have all but disappeared. Social Security benefits, well, that's in peril. People are living longer than ever per se. You got mounting student loan debt. That doesn't help. According to one researcher, an associate professor of economics, this is the first generation of Americans that is taking on substantial student loan debt for their children. All right, so the parents are taking on the debt for their children. All of that combines to form a growing and increasingly bleak American retirement crisis. It has left at least some people very worried that they're basically going to be working until they die and that they will never be able to retire. Now, with boomers' experience trying to retire playing out in front of them, it's no wonder that younger people are hustling to secure an early retirement. Yeah, there are some Gen Zers and millennials who have saved up to retire in their 30s or 40s. Some save up the majority of their paychecks, while others have cashed in on relocation bonuses. But still, the reality is that most people can't expect to retire by age 36. Plus, some who do leave work early end up regretting it. Unused to idle time and the sudden evaporation of their office relationships, some people quickly return to the office. Some people who retire early, when interviewed, would say that they would only do so because they move somewhere where they have cost of living where it's lower. But that's not always an option for a lot of people. So while early retirement isn't for everyone, retirement at its most basic level Leaving work after most of your adult lives, well, that should be. The notion that people who've done everything they were supposed to and still can't retire points to major problems in the system at large. Now, how many times have you heard that, even going back to the 2008 financial crisis? People say, okay, so I worked hard, I went to school, I got good grades, I got out, I got a job, I never took days off, never called out sick, never been late, been on time my whole life. And then this is what I got to look forward to. Or then I hear that the company's been mismanaged and so we're all getting laid off, we're all getting fired, and we're not getting a severance, and I'm losing my pension. Or you mean to tell me all the years I done put in 22 years with this company, and a week before I'm getting my pension, y'all letting me go, which is on purpose so that y'all can save money, so the CEO can buy a new boat? This is how y'all do. That's why, like the saying goes, there's no future being a company man. It just isn't, because companies want your loyalty, but they don't reciprocate loyalty. At the end of the day, it's all about the profits and about the shareholders. And if you're not a major shareholder, then you don't matter. And that's just the way it is. 9 to 5 work is slavery. It's a form of slavery. The only difference is you have the appearance of choice, but you really don't. At the end of the day, you have no power. I don't care if you make a 6-figure salary, it's not your business. So you're not in control. Someone else decides your future. They decide if you'll be happy or not. They decide if you will grow in your job or not. They decide if you will be promoted or not, if you get a raise or not, if you get a bonus or not. It's someone else's choice, not yours. Now, they keep you as the hamster on the wheel, promising you these things if you do thus and so, if you hit these milestones, if you make the company X amount of money. But there are millions of backstabbing stories where you do all that you can only for the company to stab you in the back. They say, thank you for all your hard work. Now you're fired. Yeah, that's the American way, right? Well, here's our news brief. We have what we know about the Moscow Concert Hall attack and why ISIS-K is claiming responsibility. So first there's ISIS, now there's ISIS-K. Interesting. Kate Middleton says she's having preventative chemotherapy. Trump's lawyers dance for him when he's in the courtroom at a criminal trial that could torpedo his chances of winning. Russia has finally admitted Western sanctions are hitting its oil exports. Momfluencer Ruby Frank wrote in her journal that it was a big day for evil as she detailed how she tortured her children. X is fishing for more creators, and some won't bite. An investment firm says these two parts of the market still have huge upside. Investors should focus on the cheapest 20% of large caps well as non-US stocks. The firm said these provide the best allocation opportunity in 35 years. Really? Warren Buffett's favorite market gauge just hit a 2-year high. The Buffett indicator, which just surged to 184%, compares the stock market's total value to the overall size of the economy. Buffett has warned that buying stocks at a reading near 200% is playing with fire. Sam Bankman-Fried is set to be sentenced on Thursday. Prosecutors want the disgraced FTX founder to serve 40 to 50 years in prison. His lawyers are asking for a much lighter sentence, arguing that FTX customers might get all their money back and flagging SBF's possible neurodivergence. Very interesting. Very interesting. It just shows you when you have the money for lawyers, you can get away with just about anything. Very interesting. Very interesting. All right, so get ready for Generation Biz. The entrepreneurial landscape has changed dramatically in the last couple of decades. The new name of the game is branding, and Gen Z is uniquely set up to succeed in today's digital centric marketplace. AI powered Cherish Health has raised $26 million without VC money. The company, which produces a radar based fall detection device, is set to raise a $30 million Series B. Instead of raising money from venture capital firms, it worked with billionaires and other businesses. So far, it's paid off. Apple is having a nightmarish year. The Department of Justice antitrust lawsuit is just the latest of several events that may hurt the tech giant. Yeah, they're going through a series of Lemony Snicket series of unfortunate events at Apple. Apple is also battling a tumbling share price, sluggish iPhone sales in China, and doubts about its AI efforts. Work on drugs. Elon Musk is taking ketamine, and people in tech are microdosing mushrooms. Drugs used to be for getting high. Now people are using them to get ahead. Who knew? The American South is on a roll. Southern states are booming right now thanks to an acceleration rise in population, driving major economic growth. The region is beating out the West once again as the fastest growing region in the U.S. last year. These are tough times for the consulting businesses. Major firms across the board appear to be struggling with waning client demand as the macroeconomic environment weakens. Accenture said on Thursday that it was cutting its revenue forecast in 2024, while Deloitte has kicked off a reorganization process in a bid to cut costs, which is geek speak for layoffs. In other news, billionaire venture capitalist Mark Anderson is selling his home for more than $33 million. It might be harder to buy your favorite pair of classic Nikes this year. Alphabet's Verily lays off employees working in one of its science groups. Whoop's CEO on staying nimble as a company and why the startup pays employees to sleep more. A month's pay in 1 week. South Florida Uber and Lyft drivers explain how they capitalize on the spring break rush despite a little sand and crappy music. And here's what's happening today. There will be a court hearing for Donald Trump on charges of falsifying business records for hush money payments. A hearing is scheduled in the UK for class actions against Google and Alphabet. All right, folks. So that's what we got going on today. Not a whole lot. It's just a typical boring Monday. And, we'll take that. We'll take boring wherever we can get it. So that being said, you know what this is, man. Smash the like button. It's right there in front of you. And subscribe if you haven't already. All right. That way you can be kept abreast of when new material is dropping. And remember, the system works if you work the system. Why? Because bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And on that note, it's time to go private session for our post waivers. I'll see you guys back here this evening. Enjoy the rest of your day. I'm out. Peace.